Hey, I'm here at CoinAgenda Asia talking to Michael Terpin of Transform Group, who's the organizer of this event. Michael, what have you seen so far that was good?
Well, it's just great to see the community in Singapore come out and support us. And, everybody comes to Singapore from all over Asia to do their ICOs, so that's why we're here for the first CoinAgenda Asia. But it's also been great to meet sort of a lot of new friends in the Singapore community who live here between service providers and angel investors and traditional funds and crypto funds based right here in Singapore. But we also have had people fly in from Beijing, from Shanghai, so it's been a pretty good Pan-Asian group to discuss the new trends in investing.
So when did Singapore start to become a thing again? Because it showed a lot of promise in the early stages, and then it kind of disappeared from the map for a while. Now it's back.
Well, I'd say it's back stronger than ever, and that's been because of other people in Asia dropping out. When you had China go and ban ICOs, which we'll see how long that is going to be to reverse. There's always people talking about it, and it was on the panels that, the government just wanted to sort of clarify some new rules and, perhaps take some new ownership of exchanges and things like that. And at that point, then all of a sudden it'll be like, okay, it's safe to go in the water again, and people perhaps will start doing things in China if they're Chinese instead of right now. If you're Chinese, you really don't have a choice. You pretty much come to Singapore to do your ICO. And I think Singapore has really done a great job of thinking things through clearly. They've already said, here's what you need to be a utility token. I mean, they did that before Anguilla, they did that before Wyoming, so I think they've really been a leader in saying this is a new asset class, and here's what it is, because it's not quite a bar of gold and it's not quite a stock. And here's what we think the kind of light regulation that's required. So we're big fans of what they've done here in Singapore in terms of being able to simultaneously protect the rights of investors and token users, as well as to be able to not put the brakes on innovation and just needlessly stop good offerings.
Eddie Travio, before when he was speaking, he was talking about Malta and Gibraltar as well as being other great hotspots for ICOs. Have you seen a lot of people actually relocating to those territories?
Well, the great thing is you don't have to, depending on the rules of the territory, relocate there.
Right.
Most ICOs going through Singapore are not from Singaporeans. Different places have different requirements in terms of how much time you have to spend or how many Singapore, or Malta natives you have to have involved. Typically, you're going to use the lawyers and the accountants are going to be local, so obviously provides jobs there. You're going to pay fees over here. You're going to use a bank account typically over here. So it varies from region to region. Gibraltar actually started out strong, and most of the panels sort of said that it's unquestionable that Malta is a better venue now than Gibraltar, because Gibraltar has sort of priced itself out of the market. It's as expensive as Switzerland, and it also is just putting a lot of hurdles, this sort of sandbox model where they kind of help you figure things out and they have to check the boxes off the line, whereas Malta is pretty simple. They basically ask you to get an audit, sort of show what it is you're offering. They get like one person to approve that, and then if you stick with that, you're fine. And so that's about as light regulation as you have. I think most of these entities should have some kind of regulation, but the simplest one is just self-identify, know what the rules are. This is a big issue with the U.S. right now, is nobody knows definitively what the rules are, because every time someone from the SEC goes to a conference, they say something slightly different, and they haven't had public hearings yet, which I think is irresponsible, because they are supposed to have public hearings, do proposed rules, then do final rules, and then there's no question.
Yeah, it's like every time they speak, it's be very careful, speak to us.
Right, and that's not what government is supposed to be for. Can you imagine if you were getting on the freeway and the sign kept changing from 55 to 75 and then finally said, we don't want to tell you, just use your best judgment?
Exactly, yeah. All right, so you've been doing events like this for years. You've got your flagship event in Vegas every year. What's different this year that you've noticed?
Well, the importance of Asia, that's one reason, that's the primary reason that we're here. Despite China and Korea and Japan governments being more timid about what regulation that they're going to require or what they're going to let through, the appetite of funds, the appetite of family offices, the appetite of everyday well-heeled investors, they don't call them accredited here, but let's just say sort of investors who have some, spare money and it's not going to affect their lifestyle. In Asia, this is where the money is at the moment. I mean, every ICO that I've talked to has said they're spending at least half their time in Asia going around and talking to family offices and talking to funds because they've found that Europe and the U.S. hasn't quite dried up, but first of all, most of the U.S. money is in sort of Caribbean funds anyway. So I don't know if you call that then U.S. money anymore, or whether you call it Cayman money. But those are sort of like the important larger funds. And we did have, FBG Capital here, which is definitely one of the larger funds, and they're one of the more significant ones out of China, $100 million under management. We had their head of investments here, so he talked a little bit about what he's seeing, and in our upcoming event in Malta in a few weeks, July 15th to 17th, we'll have Alphabet, which is one of the top European funds. And so, we try to go in and get a cross-section of funds in different regions, find out what they're looking for. Many times they have different perspectives. Other times they're looking at this as a global market and saying, what makes sense for me to go and hit my numbers that my investors, if I'm a fund, are going to consider to be, that they're happy with their decision to invest with us. Or if you're a long-term investor or a short-term investor as an individual, what are you looking for? Are you set it and forget it and you want to buy 10 ICOs and see where they are in 10 years? Or are you trying to flip right after it hits the exchanges, or are you somewhere in between? I think most investors are sort of looking at both short-term and long-term. They're not going to flip everything, but they're going to want to know that if something goes up, that they at least have the ability to maybe get half what they put in out and let the rest ride. Yeah, let the rest of it ride. Everybody has different personal philosophies on investing. I mean, I certainly check market swings, and I'm not selling pretty much anything right now because it's obviously a bear market. You don't sell in a bear market. Someone on one of the earlier panels quoted Warren Buffett to be fearful when others are greedy and greedy when others are fearful. And so this is the time to be buying and investing and not the time to be, panicking and selling. We've just hit, for Bitcoin, a quadruple bottom. I mean, when something goes and hits a bottom and then goes up, and with massive new short sellers in the market with the CBOE and other things that make short selling easier, the fact that it's now hit the same $6,500 price 4 times in a row, it hasn't gone lower, I think shows most chartists that this is about as low as it's going to go unless something fundamentally happens to change the direction. But, we've found historically that summer has been soft, just like it is in the stock market. We've always had our own little Santa Claus rally effect most years in the Bitcoin and crypto markets. In the stock market, they say sell in May and go away. I've been fond of saying please remember to sell in December. If you're going to take stuff off the table, that's a good time to do it, and then reinvest in around now.
I think you said yesterday that it tends to happen right after the halving as well. Have you noticed that?
That's a different phenomenon. So every year you tend to have the fourth quarter be the best, but the 2 halvings that we've had so far have been when you had the biggest run-ups. So the first halving was in November 2012, and I've looked at this and studied the charts, and pretty religiously, a year after in December is when you hit your market high. You start actually getting some indications maybe 6 months. Scott Walker had mentioned this before the halving. I think that's when it moved up from like tenths of a penny to like a buck or two. And then you end up like going, and once the halving's successful and nothing funky happens and the code works the way it's supposed to, you think it would shoot up right away, but it actually takes a while for the supply and demand to factor in, with demand typically going up fairly linear and the drop of 50% overnight of new tokens coming on the market. So you went from the initial 50 Bitcoin coming into the market every 10 minutes, every day, so 7,000 a day, to all of a sudden the halving, it's 3,500 a day. Then the second halving now it's 1750 a day, and the next one in 2020, so just 2 years from now, it's going to drop from 1750 to 875. I mean, so it's going to be half. It's going to be the first time we're under 1,000 new bitcoins a day. And again, remember, just not that long ago, it was 7,000 a day.
That's right.
And yet you have more people using Bitcoin. You have more market demand for crypto that then follows where Bitcoin is. And so the second halving, from November 2012 to December of 2013, you had a 300x run-up. And, what other asset class has 300x run-ups? I mean, obviously, if you got it a tenth of a penny, but there's a fair amount of people in the market by 2012 that were able to, profit on that. And then even more, obviously, in the market who had, waited out the bear market of 2015. And if you had invested the day of the halving, 2016, it was about $660, as I recall. And then it went up the next December to 20,000. So that was about 30x. So you got 300x, then 4 years later, you got 30x. If you follow that logical trend, the next one should be maybe 3x, and then after that, maybe 1.3x. And at that point, I think you're going to have 500 million people in crypto.
Yeah, it's certainly an enticing thought. So what do you, not in the investment space, but or in the value space, but just in general, what would you like to see next?
I think we have to have what I refer to as the Trojan horse of crypto. So this happened in the internet. So you see parallels between the adoption of the internet, the adoption of social media. We're still in kind of the early adopters meets the early majority phase. I mean, right now you have about 20 million wallets in the world out of almost 8 billion people. So 1/4% of people on Earth have some kind of crypto wallet. Now, that's up from when I got in early 2013, where it was maybe a little over 1 million. So pretty good growth in the last 5 years. But of this is parallel to where we were at in 1994 on the internet. 20 million people were on the internet in 1994. By the time you got to 2000, it was 500 million. Today, it's pretty much everybody. Don't
they call that like the endless September or something?
I hadn't heard that phrase, but it's basically when you have parabolic moves. And usually what happens is there's, in technology at least, it's about the kind of, your friend tells you have to have an effect, whatever that is. I mean, it's just sort of like word of mouth, right? So, and a lot of times it takes sort of this one thing that all your friends think is cool, that if you don't have it, you're not cool. For television, it was the Uncle Milty show. Okay, because when you had televisions, they were kind of a cool little box, but there's nothing to watch. Once you had Milton Berle, popular comedian, having a weekly show, and you had to go to your friends to watch, you're thinking, oh, if I could have a TV, I could watch it in my own living room. And with AR, it was Pokemon Go. With mobile devices, it was first Snake, and then Angry Birds. And so when you have something that gets millions and millions, with Facebook, I'm sure a lot of the adoption was Mafia Wars and Farmville and games that you could play. We haven't had that with blockchain yet. So we haven't had sort of like Angry Birds blockchain edition. We haven't had Candy Crush blockchain edition. We will. We will have something that everybody's like saying, what are you doing? Oh, I'm playing Candy Crush blockchain. What do you mean? Hey, I made like $1,000 today, right? And so you're going to have things that are probably going to be non-gambling in places that are regulated that can't have it, but it'll have prizes, right? And they'll be sponsored. And you'll have to have a wallet. So I think that's one thing that'll drive it. And the other one is sort of, in the early days of the internet, you had the shiny disc that AOL sent everybody. They weren't even discs back then. I think they were floppies originally. Right then they were discs that said, want to get on the internet? Here, install this thing. Yeah. And I think that in where we're at right now, I think the telephone companies hold that key. So just think if a year from now you're turning on television and you basically hear an ad that says, switch to T-Mobile and get $250 of blockchain apps free, right? So everybody's trying to figure out what to give that's of value. They've already done VR promotions. Get your VR headset free by switching, T-Mobile and buy a new Samsung, right? And so that got a lot of sort of visibility for VR. It's certainly grown exponentially since the beginning. It's still small because it does I think VR is a much harder adoption curve for people to get used to, like watching things with their glasses on, and than blockchain is, because blockchain is it's just really the user interface. And when the telephone companies not only kind of onboard you, but they already have your KYC, right? You don't have to go in and wait for an exchange to go and, like, whitelist you as not a criminal and things like that. Your phone company already has your address, they've got your ID, they've got your bank account, they got all this stuff.
Yeah.
So they could just simply say, here, click the box in your new sign up. Do you want us to buy tokens for you? And then you just simply say, and typically you're only going to be buying, not selling. You're going to buy them to use this thing. If you want to sell, then you can go and we'll set you up with an exchange and provide our whitelist information to, Binance or whoever. So I think that when you have the combination of tens of millions of telco users, easy onboarding by just clicking a box, and all of a sudden it's on there. In 1994, I had a studio executive at a U.S. Major Big Three network tell me that they would never be on the internet because his mom will never go on the internet. It's too loud, because back then it was modems, bing, 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 and she wasn't going to pay for a second phone line. Well, that's not how you get on the internet today. Today, you hand mom an iPhone and you say, here, mom, get a prop, here, mom, watch Netflix. So the user experience changed completely. Immediate on, that was a big deal in the 90s, wondering if it would ever happen, instant on, now it's there. And broadband, wireless broadband mobile, that was always the holy grail. Now we just take it for granted. Yeah. So when you have wireless broadband mobile blockchain, that's when you get your billion users.
Yeah, I certainly look forward to that day.